Let's talk markets. What you can see there, Zoom, which has fallen about 85% from its peak, is now moving more into enterprise. And you might be tempted, not just with Zoom, but a whole bunch of other stocks, to say, well, which stocks have fallen the most? And is there some opportunity to bottom fish? Many years ago, about 20 odd years ago, I wrote a column in the Financial Times. See all those books? They're pretty much all written by me. And I'd written a column in the Financial Times. By the way, you can download some of those from the links in the bio for free. In which I'd said that, of course, if a stock has dropped 90%, you might think, well, it's bottomed out. That's it. Must be a good time to get in just on that alone, plus some good earnings figures. Would you think a stock that's dropped 90% could drop another? Well, if it's dropped 90%, would you think it could drop 95%? And you'd think, yeah, of course it could. 90% could drop 95%, but that's only a 5% drop, isn't it, Alpesh? Well, actually, no, it's a 50% drop. A stock that's dropped 90% and then halves again will have dropped 95% from its peak. Yes, it'll have dropped 50% from its 90% level, but that means it's only dropped 95%. So for those thinking that something that's dropped 90% has bottomed and surely can't drop more, if you agreed that if it could drop to 95, then you presumably agree that it could drop another 50%. And that's part of the problem. That sometimes the maths confuses us and we overestimate the upside, underestimate the downside.